Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. How do options react around key inflation data? Helping us to answer that, we have Dr. Russell Rhoads, Associate Clinical Professor of Finance at Indiana University. Russell, it's great to see you as always. Welcome back to Trade Talks. We get important inflation data this week with CPI on Wednesday and PPI on Thursday. You've done some work with respect to Nasdaq 100 option behavior around these numbers.
Yeah, and the one-day options or the daily expirations have really made it easy to get an idea of what the mind of the market is going into major numbers. Last week we had FOMC and the non-farm payroll number, and the option, the straddle prices went up the day before those and came down right the day after each of those, and we see the exact same thing, especially around CPI, because the market has been so interested in inflation and hanging its hat on inflation.
So what have you found with respect to Nasdaq 100 reactions to inflation numbers?
Okay, well, the CPI number is one that you mentioned PPI, and we don't have enough data points right now, but we do have Wednesday expiring options going back a couple of years. So we can get an idea as to what the NDX option traders were thinking with respect to the magnitude of the move around the CPI release. And first, the one-day straddle price, the Tuesday before that Wednesday announcement, it's been pricing in about 2.25% for the last 12 monthly reports. Back in November, we actually had the best day over the past couple of years for the Nasdaq 100, up about 5.5% on CPI day. And ever since that big outlier move, the anticipated move for the one-day straddle that you could buy Tuesday afternoon and expires on Wednesday afternoon has just trended lower. It's like the expectation has come down. It could be that the concerns around the impact of inflation, or maybe some traders believe that the Fed's got inflation under control. But last month, that expected move based on the straddle was only 1.3% up or down. That's only 13 basis points higher than the average move the average projected move from NDX one-day straddles that we've seen over the past couple of years. So at least the market's anticipated concern around inflation is definitely coming in. And we'll see tomorrow and Wednesday if that's going to hold up.
So then what do you expect for this week?
Well, first thing, it really does depend on what the straddle is pricing in late on Tuesday, and I'm definitely going to tweet out what I'm seeing and what I'm thinking about doing in the last hour of trading tomorrow. I think we're overdue for a big move from the CPI. Also, the number that we're going to get is based on April inflation, and it kind of seems like a long time ago, but back on April 2nd, OPEC came out and had a surprise cut, which boosted oil by about $10 or so, and that should work its way through and show up in the number. So I wouldn't be surprised if we get an upside surprise from analysts' estimates on the CPI. I'm not a big fan of buying straddles, really not. But if the straddle's pricing in 1.3% or lower, a small move relative to the importance of the number, I'm probably going to look at doing some sort of long volatility trade late Tuesday using Wednesday expiring options ahead of Wednesday's report.
All right, Russell, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.